Hello, everyone. If you're a smart money trader, you likely always have this question in mind. Is the fair value gap a suitable area for entry, or is it the order block? Probably. The correct answer lies in both possibilities. In this video, we delve into the reasons that make each of these areas suitable for entry, so that we know when to consider the fair value gap as the entry and when to consider an order block. If this video was helpful for you, please like and subscribe. Alright, we have a bullish movement. We consider the last bearish candle before a strong upward movement as an order block, and the gap between the high of the first candle and the low of the third candle as a fair value gap. Now, the main challenge is determining which one is the suitable area for entry. To determine this, we must examine the movement preceding the formation of the fair value gap and order block. You can see that the price has fluctuated between two levels. The higher level has formed a resistance area, and the lower level has formed a support. The price has repeatedly encountered support and resistance and has attempted to break through them, but has not succeeded. However, ultimately, with the failure of resistance, a break of structure has formed. The main point here is whether the order block has caused the break of structure or the fair value gap. The answer lies within the level of resistance. When the price repeatedly attempts to break through a resistance level and eventually surpasses it, that area itself becomes a support for the price. Now that this support level has overlapped with the fair value gap, we can say that the likelihood of a price reversal from this area is higher compared to the order block. You might have a few questions, the first one being why we didn't choose the upper area for entry. In response, it must be stated that no resistance level has been formed to transform into a support level upon the price breaking through it. Additionally, while the price encountered the order block and elicited a partial reaction, it did not result in a price reversal. Now, for the continuation of the clip, let's discuss what to do if there is no support level overlap, and when to use the order block as an entry point for a trade. Let's examine this chart. Despite having only a break of structure and no broken resistance level, due to a significant imbalance, there is still a possibility of price reversal by reaching a fair value gap more than the order block. However, each time the price reaches a fair value gap and changes direction, it returns there again and creates a new low. It can be said that the area has been mitigated. In these cases, even if we enter the trade at a fair value gap, we must close the order when the price returns and wait for it to reach the order block. When the market moves slowly and fair value gaps do not show noticeable imbalances, consider order blocks as entry areas. The gaps generated are solely due to price hitting the order block area, rather than significant buying and selling activity in the fair value gaps. When a fair value gap results in the formation of another fair value gap with noticeable imbalance, it is because there are many unexecuted orders at this price area. The price may not be able to reach the order block and is likely to change direction again from the fair value gap. To determine which area is more suitable for entry, you need to identify whether the price movement is due to an order block or an imbalance, and which one is controlling the market. Make sure to carefully examine the chart to understand when the price reacts to the order block and when it reacts to the fair value gap. I hope this video has been useful to you.